While we're talking personal finance, so let's talk a little bit of student loans. Interesting story today in the Wall Street Journal, talking about how the reinvigoration of student loan payments are going to become due again in October, might actually be taking some folks out of the stock market. And one thing that I found interesting when sort of thinking about this story is, as someone that graduated in 2020 and had a lot of friends that had delayed student loans, a lot of people did really get into the day trading concept of that meme trade and getting excited about it and using Robinhood and things like that. And what I found interesting about it is when you think about the amount of money those people are putting in and you think about what this story is, are we talking about people not putting as much money in stocks and actually impacting the stocks, or impacting a company like Robinhood? It'd be interesting to see if Robinhood's daily users get impacted at all as people start to pull out their little bit of savings, because Robinhood has a lot of accounts that don't have a lot of money in them. It's not a traditional trading account, a brokerage account with thousands of dollars. Some people use Robinhood with a couple $100. And so does Robinhood end up with less daily active users or something? Like, where do you sort of see it play out in the market as people try and save more and go back to paying their student loans? I think is sort of what people are trying to figure out here.
Well, I was kind of surprised that in the journal piece they talked about how 57% of Gen Z, right, has between age 18 to 25 have at least one investment. I was surprised to hear that. Now, what they're talking about here is most of them are investing in cryptocurrencies and individual stocks, which isn't always the best financial move. But hey, with Robinhood, you can actually buy fractional shares. So if you want to buy Apple, you want to buy some Tesla, you can actually do that now, only a little bit of here and there, for only a few $1,000s. Is it going to be impacted by the return of student loans? I think for sure. I think for sure you're going to be kind of sucking up some of that money you'd go to play with on the market, goes to paying off some loans. Now, they had a guy in the story, he only had $5,000 worth of loans. I'm like, that's not that bad, man. That's not that bad. I mean, people have hundreds of thousands.
Don't sell your Dogecoin to pay that off, right?
Yeah, well, the guy made money off Dogecoin.
Yeah, right.
Anyway, yeah, I mean, I think it's not. We'll see about Robinhood. Yeah.
For sure. And also, I think back to the pandemic when people were getting stimulus checks, that was going towards investing, things like that. But I got to say, Gen Z, they are really savvy with the investing in the Robinhood. I don't know.
More than I thought, right?
More than I thought. I don't know if it's because TikTok, social media, it is so easy to go on and get advice and tips and tricks. Like my little brother, he was like, you need to have these 3 credit cards, you have to do this stuff. I'm like, oh boy.
I get so many real estate, like, why are you not owning real estate? This is how you do it. And I'm like, I should stack my real estate holdings.
I know,
this is crazy,
it overwhelms me, but I really think,
doing it wrong.
I think TikTok is a big driver of that. You just learn a bunch of stuff and you have access to it right at your fingertips.
And this goes into girl math maybe, right?
Maybe.